basically at that point in time in 2025, China would consume 100 million tons of meat annually, which is a phenomenal big number. The second thing is that if we hit that number in 2025, what we're looking at is it will be almost hitting the 2019 meat consumption of the New Zealanders and the Canadians, which is quite phenomenal. And this is what we're seeing in terms of the ability of China's economic growth to drive the spending power and consumption of the Chinese population. And if you look at the import volume numbers since 2014, these are actually Chinese custom numbers as well. The import of meat has actually grown at a compounded rate of 30 to 40% over the last many years. The number will continue to grow. So in 2019, basically China has imported about 5.4 million tons of meat. This includes beef, poultry, and pork. And if you believe the China Meat Association number, if we hit the per capita number in 2025, China is expected to import 2 to 3 times more of that, hitting about 10 to 12 million tons. Based on what we have seen in the numbers in last year in COVID, together with stockpiling of the meat, which actually exceeded in excess of 8 million tons, we expect the number that is forecasted at 10 to 12 to be easily exceeded. So what that has meant is that it is extremely interesting to actually look at how that has happened. So why is that the case? There are a few factors that actually affect the way that meat is imported into China. The interesting part about this is that imported meat is actually very, very cost competitive. If you look at imported pork compared to locally produced pork, the price is only half of that of the locally produced pork. Why is that the case? The case of that is because actually resources is actually not cheap, no longer cheap in China. It is actually quite expensive to farm, and China does bring a lot of the feed in here to actually create and farm the meat. That's one part of it. The other part of it is, despite rapid mechanization of animal farming, most of predominant farming still very much a single farmer. Based on studies, about 75% of pig farming is still single farmers. Okay, and that really leads to much more competitive cost of imported meat. The other interesting part about this is the last bottom sector, which is the culinary differences between the Chinese consumption habits and overseas consumption habits. In US and in Canada, they tend to go for the meat-based meat, so such as breast meat and just kind of steaks and so on. Whereas what happens with the chicken feet, the internal organs are actually usually very worthless and are not consumed. These are actually big delicacies, especially when we bring it to China to be used in huoguo and so on. So because of all these structural changes and the complementaries, imported meat has actually been a very growth industry. And what we've actually seen is that some companies are starting to take advantage of that in business models that are actually rather unique. So let me have the opportunity to introduce you to the company I just joined in March last year. When they approached me in March last year, I did not think that the pandemic was going to get that serious. Having gone through SARS, I always thought that maybe the pandemic would be constrained in China, Hong Kong, and perhaps Singapore as an Asian one. If I knew it was actually going to be that global pandemic, I would have thought twice about switching jobs. But when they came to me and they started talking about what they're doing in this space, I was quite intrigued. And I moved and joined OIG in March last year. So what do we do? So OIG is actually in this entire cold chain ecosystem. And what we do is that we provide value in terms of order aggregation, and we actually help our customers to manage the entire supply chain such that the ordering and the delivery of cold chain products is actually achieved with the minimal cost with the highest level of standards. What does that mean exactly? So we are not a trader platform, so we don't buy and sell, we don't take price risk. What we do is that we provide 6 levels of services to our customers, starting with procurement. So if you work through us, you will be able to access the entire order book of the Chinese meat import factories. China does not impose quotas on meat import, and they actually welcome that because it actually solves a lot of problems without bringing the pollution. But China is extremely strict with its food safety requirements. For every plant that is certified to bring in meat, basically they are certifying that plant and also the SKU, which means which plant can actually supply which meat over here. So right now there are about 800 plants around the world globally, from Germany to Brazil to Australia, that are approved to be able to supply meat to China. If you work through OIG, and we'll talk a bit about what are the requirements for customers to be able to work with us, you'll be able to access the entire order book of the 800 suppliers around the world. If you work with our second competitor, they would have less than 200 sources of supply. So that's one. So as part of this service, what we do is that we provide the ordering service and we charge a procurement fee anywhere between 300 to 500 RMB per ton to facilitate this service for you. And in exchange, be able to help you achieve supply chain visibility from source all the way to the destination. And a typical 40-foot container is about 25 to 27 tons. So that's one part of the service fee that we provide for our customer. As I've mentioned, we do not mark up the product. So what you see as the end price will be the end price. And then at the point in time we place the order, the cargo gets into the ship, our customers typically pay 30% down payment in order for the product to start delivering. So as the product float and about 7 to 10 days before it reaches the shores in China, our customers are required to put up the remaining 70% in order to get your bill of lading. At that point in time, half our customers come to us for supply chain financing, basically for us to put in the remaining 70%, and then we actually charge an interest and spread as part of the service fee to finance that. In addition, because a lot of these procurements are bought overseas, there is a requirement for US dollars and Brazilian real, Forex. So we provide Forex services to them as well for exchange. And then we work with banks and we basically then charge a spread as well. In addition, to help our customers manage the price risk, we also sell them options of calls and puts to help them manage the price risk. At the point in time when the cargo then reaches the shore, we have got teams at the 7 or 8 major ports in China to help you clear customs. And then at that point in time, arrange for haulage for the products to be taken to the warehouse. And basically then we offer cold chain warehouse services. Because our volumes are fairly big, right now in China, we lease about 100 cold chain warehouses all over China, which basically makes us one of the largest, if not the largest, single user of cold chain facilities. And typically the products will stay in the warehouse anywhere between 30 to 50 days. And at that point in time, we actually don't need our customers to commit to renting 100 square meters or 500 square meters, because what we do is that we actually master lease a certain amount of space, and then we basically break it down into pallets, and we charge our customer on a per pallet per day basis. That's almost a bit like a co-sharing warehouse, and we've actually done that for the last 3 years. In about 50 days, basically our customers will call us up, and then we'll arrange for the haulage to go down to the wholesale centers. And this is where the distribution of meat then begins in China. As I mentioned just now, in 2019, China imported about 5.3 million tons of frozen meat from all over the world. OIG, as the largest seafood and meat platform, accounts for a quarter of that. Okay, so in 2019, we imported about 1.6 million tons. To give you a sense about how that volume sounds like, it's actually about 70,000 40-foot reefer container, and these are all minus 18 degrees. So if you look at the breakdown in terms of the meat composition, actually pork is the biggest component of our Chinese diet, as you will not be surprised. Beef is becoming a very important part of the diet as well because of the health benefits and also the move towards higher consumption of the meat. As I mentioned, in order to work with us, what we do is that if you look at the entire meat distribution value chain in China, if you buy meat from the market in China, it would have gone through 5 layers of distribution. So people that we service well are actually what we call the first-tier distributors.
I'm not sure I understand.
Oops. Well, that's interesting. So from that perspective, the first-tier distributors, there are probably about 3,000 of them in China, and we actively cover about 2/3 of those. So in order to be able for us to service you as a customer, we tend to work with people who are able to place a single order of a 40-foot, 25-ton container, preferably of a single product type. So if you are one of the big distributors of the first tier, you typically can bring in several containers of, for example, beef ribs, chicken feet, and usually what we ask of our customers is to be able to place a single container order to facilitate that. So that's how we are managing in terms of the supply chain, and that's why the volumes that we are putting through is actually fairly large. Of course, when we talk about meat, you will always remember in China, two of the largest players in this space, which is COFCO, Zhongyang, and also Shuanghui, which actually owns Smithfield in the US. Just to give you a sense, I won't go into the details of this, but in the pork and the beef category, OIG is actually larger than both of them. So last year was a very interesting year in terms of how the COVID was affecting the global food supply chain. I think, also talking to our local authorities as well this year, as we started discussing about this, we started realizing that a big pandemic like this and a black swan event actually puts a lot of stress on the actual food supply chain. As a matter of fact, last year, as some of you remember, when Singapore started doing a lockdown, we were actually starting to have issues with vegetables from Malaysia and some of these supply chain issues. So when we went through most of last year, it was indeed a very erratic supply chain situation. The good thing about it is that because of the way that we managed the entire supply chain, which was actually very much tech-based, we were able to kind of overcome quite a lot of those issues. And we were able to preempt part of those using technology. And I'll talk a bit more about how we managed to do that. The other thing that was also causing a bit of problem last year throughout the world, but mainly in China as well, was that the infection clusters started creating numerous occasional outbreaks and so on. But having said that, I think when I reflect back on how the Chinese government has actually managed the entire supply issues, the COVID issues, I was actually personally very, very impressed on how many of these situations were actually put under control very quickly. Given that I was able to travel last year, I managed to stay in China from August to November, and I saw firsthand of how the Chinese government used technology to basically allow them to get a hang and get a grip of the situation and very quickly resolve a lot of these areas, with very strong policies and also management supervisions. So in a traditional agricultural product space, actually, if you look at the entire supply chain, especially for imported meat, you actually go through like cultivation and slaughtering and so on, and brings in the products into domestic China. Actually, if you kind of break this down, it's a little bit easier than that as well. And what we try to do at OIG is to really kind of delight our customer in terms of the entire global supply chain. And we see the entire business getting broken down in 4 types of flows, right? So there's a trade flow, which basically allows the trading of the products to actually happen. The information flow, which basically facilitates the entire logistics process. In my view, logistics is no more than just having the information of where your product should be and how it needs to be managed. And the interesting part about the whole entire process is that the information flow is now becoming more and more important as part of the management cycle. And there's a lot of things that people can actually do with the kind of information that has been processed. And with that, you can actually help you to actually manage a part of the business. And I'll talk a bit about how we do that. Third is, of course, the goods flow. This is the physical flow of the product that does that. And in terms of providing services, again, I've joined them part as the CEO for Asia Pac, but also part as the group of the group real estate. And to be able to design fit for purpose, good quality warehouses so that the storage conditions and also the customer service can be improved. And then last but not least, as part of the 4 flows, one of the most important flows is also capital flow. This is how money actually gets exchanged. And this is also one part of the area where we think Singapore has immense strength in terms of being able to bring value and be part of the interesting proposition of global trade. So when I first heard about this company and talking about agricultural products and imported frozen meat, I was not expecting a company to be so tech-based. So as a matter of fact, OIG is based in Shenzhen, and the reason why we're in Shenzhen is because we are tech-based. The platform last year had a GMV of about 30 billion RMB. That's about almost $6 billion of transactions on our platform, and we're a little less than 400 people. Okay, as a matter of fact, our biggest department is the IT department. And one of the key advantages that we do is that we actually write our entire ERP system and the like with the AI engine that we'll talk a bit more about. And really, when we talk about managing a supply chain that's so global and so intricate, including the sensitivities of cold chain and so on, technology is the only way you can actually do in order for you to be able to get the kind of service levels that we need to have. So let me talk quickly about how we use tech and information. So one of the things that when the pandemic actually started early last year was we're actually a bit concerned with our customers and how our customers are managing the process. I guess the good thing about it is that China underwent a strict lockdown in the beginning part of it, but very quickly, because of the domestic consumption power, it really kind of recovered very quickly. But having said that, we're still very cognizant about how our customers might actually be getting challenged. So what we actually did was that we were able to use our AI engine to be able to go back into the data to understand how a customer is managing. And because we actually help to manage the entire supply chain for a customer, from the ordering process to the transportation, to the warehousing, storage, and then also to the sending out to the actual to be demand point, we actually have a lot more data in our hands to be able to crunch and compare them to previous year's data, offtake, even at the SKU prototype level, to give us a lot of insights in terms of how our customers are doing, whether they're doing better or doing worse, or are there challenges in certain parts of it, and be able to go back to our customers and offer help. And I think that was very, very insightful and very useful for us to make sure that we are of service to our customers. One of the other things, as I mentioned just now, was, for example, when you saw that with Tyson, there was also a lot of risk in terms of some of the upstream plants having COVID infection at the plant level and actually stopping supply. I think most of you would have remembered some of the US plants and that was going through quite a bit of that. So early last year, what we also did was that we overlaid the macro data over what we have, and we started using our AI engine to predict the source factories and identify whether some factories were actually having higher possibilities of COVID infection. And we were quite lucky to be able to identify some of those and then started paring back the supply in order for us to mitigate some of those supply risk. So last year was a very interesting year in terms of how we were able to use technology, supply chain visibility to actually do work for our customer. So in 2020, the actual volume that we actually handled in China with that pandemic going through actually did not decrease. Actually, the entire Jan to December number was still in the 1.6 million tons. If we had been able to clear containers even faster, that number would have reached probably closer to about 2 million tons. So one of the things that actually happened during last year was that because of Chinese government's very concerned thing with the COVID possibly transmitting through cold chain, which I will tell you that it is not possible, they were doing actual COVID swaps on the products as well. So for every batch of products that was imported into China, we needed to do 4 COVID swaps on the packaging and then 2 on the products. So that has really kind of caused a lot of stress in terms of the clearance of containers. But the good thing was that since the quarter of last year, we were able to work with the government to come up with ways in order to mitigate that, and that situation has been put under control. So what we have actually seen so far is really a massive use of technology, by somebody like OIG to be able to get into an industry where it's actually very traditional. And from a perspective, it's actually, at least for me, quite an insightful thing to look at from that. And OIG actually been around for maybe less than 10 years, and we have actually managed to get ourselves into the China top 200 importers. We're the only import food company that made it into the list, and this list includes the likes of the Foxconn and the Apples and so on. So that's not a small feat. And given where we are, we continue to innovate a lot of products for our customers. We continue to look for new ways to be able to actually help our customers to deal with things like additional financing burden, the use of basically IoT and also blockchain to be able to help them solve some of the financing problems, which we can talk about next time in other sessions. But what we end up doing is really throughout the entire flow to be able to help our customers much better in terms of managing that through technology. So what I'd like to do is perhaps pivot myself a bit and then take one step back and start talking a bit about China, right? So if you look at this diagram, can everyone kind of guess what is that common theme throughout what you're seeing here? I think perhaps most people understand this. All these are Chinese companies. And if you look at Motorola, MG, Club Med, Fosun is a private, one of the largest and most successful private enterprise in China, based in Shanghai, called Fosun Jituan. So what we're beginning to see, or we have already been seeing, is that China is continuing to grow. And as it starts to grow this global presence, mergers and acquisitions will become part of that growth process. This is not new. I think we've seen that with the Japanese firms as well in the 80s, where the Japanese firms were also acquiring many of the US companies and so on. Pragmatically speaking, I don't see this actually stopping anytime soon. So I think it would not be of surprise to hear that more and more companies will seem to be a foreign company, but actually it will be a Chinese-owned company. One of the things that I like to do every year when I give talks to different people is really to look at the Global 500 Fortune ranking. So I updated the list again last year for a special talk with the Ministry of Education. And it was actually quite enlightening and quite surprising. So this is the Global 500, the top 40. One of the phenomena that you'll see is the fact that the Chinese companies are moving up in ranks, as far as the Fortune Global 500 is concerned. As a matter of fact, I always look with great interest of my old firm, Royal Dutch Shell. At one point in time, Royal Dutch Shell was actually #1 in the actual respective rankings. So we're starting to see many of the companies moving up the ranks. Of course, you look at this and say, well, most of that are state-owned enterprise, but actually not quite so. You're also starting to see a lot of the private enterprise coming in as well. The second thing that you will find is that I was quite surprised with this. In 2020, it was the first time in history that the number of Chinese companies, right? So this is including Hong Kong, that's 124, including Hong Kong, Taiwan, that's 133, that has exceeded the US companies in the Fortune 500 list. I think that's very significant in my view. And I think this will continue to be a trend. China by nature by itself is a very large base and a consumption base, and it's basically able to then create a lot of value. And we'll talk a bit about the technology roadmap as well as we go along. The other interesting thing about China that I've seen over the last many years is that perhaps in the early years of China's growth, you see a lot of imitation, you see a lot of learning lessons from different business model and kind of copying it and then applying it to a big market. I think more and more we're starting to see innovations around business model that are above and beyond what has been done. And a good example of this is you would have, maybe some of you who have traveled to China, is Hema Shenzhen, right? Hema Shenzhen. It is actually interesting because if you do a comparison on this against what Amazon has been doing, it's quite enlightening to actually look at this and say, well, interesting. So if you look at Amazon's first Go store, it was actually up in 2018, okay? But actually the first Hema store was already out in 2015, 3 years ahead of that. And by 2019 in June, there was already 150 Hema stores, okay? It took Amazon the same time to open 8 stores as Hema opening 100 stores. And the type of innovations around that was also quite interesting. Of course, we have got the personalized shopping recommendations using AI, scan and go, digital price tags, which were basically the pushing of this new retail format. But the interesting thing about this is that the Hema business model also provided a service which was quite unique. A super delivery, fast delivery, where you are able to get delivered within 30 minutes free if you're within a 3-kilometer location for both store purchase or delivery online. And I personally have tried that, and it was quite phenomenal how fast that is. And if you compare that to the fastest delivery window for Amazon, it was a 2-hour window. So it's actually quite interesting to look at this and say, hey, maybe what China is doing is worth us to kind of look at and also perhaps examine. some of you would then say, well, in terms of tech, maybe on the economy, tech and so on, but basic research, for example, the recent shortages on chips, maybe China is still in the very low end of the R&D and the basic research. China is not absolutely there yet in the very high-tech space, but let me share some numbers in terms of the spending alone. So in the latest 5-year plan for the research, in 2021, they've actually announced to spend an increase of every 7% every year, and they're closing the gap in terms of the R&D spending. So in 2019, US being one of the largest spenders of R&D was spending about almost 600 billion. China is already spending almost 350 billion. And with the actual committed growth of the spending budget, I think the gap will increasingly close up. And if you look at that, there are certain tailwinds in which China will be able to take advantage of, which I think will be quite interesting to watch over the next few years. So with China being the second largest economy in the world, it has actually the highest mobile payment penetration, okay? Almost 600 million people in China pay with their phones, and that is a phenomenal big number. So don't get me wrong, China internet penetration is actually lower than that of the US, but because of the absolute base of that population of Chinese, there's still much more people in China that actually has access to internet, not to mention the internet being 98%, which is actually mobile based. In the other sectors, you're also starting seeing a lot of financing that actually goes into the funding of a lot of the technologies. In 2018 alone, 50 telecoms, media, and technology companies actually got listed and actually able to account for almost $200 billion of market cap. Yeah. And in areas where China has been making a lot of headway, for example, in electric vehicle, in artificial intelligence, in blockchain, China's investment in AI in 2018 was half of that of the global investment. Okay. Last but not least, we talk about chips. Yeah. China only produces about 30% of the chips that it needs, but it is the largest consumer of that. So when we saw the 2021 research forecast, a lot of that money will actually go into the basic research plus also related research into chips and so on. So I personally believe that China will continue in this journey on technology, and coupled with that to then actually innovate around a lot of the business models as well. So then let's talk about the last part of it, which is Singapore, right? And Singapore actually is extremely vulnerable to economic conditions because of our very extensive trade, depending on the global trading environment. And that is quite evident when you look at the recovery that we're going through and also what the Chinese has gone through. We basically, China, when I went back in August last year, it was interesting to see how quick the recovery came up. And a lot has to do with the fact that it actually does have a nice domestic market. So although China essentially closed its border due to concerns with the pandemic, they were actually able to drive internal consumption and be able to get the GDP up as well. Singapore was not in such that good a condition to be able to do that. But there were certain things about the Singapore government that really helped us in terms of facing the pandemic. And if you look at the possible strengths that we have, I mean, from a financial and physical perspective, Singapore actually has very strong finance itself and be able to kind of really provide a lot of the money to be able to get us through this. Having said that, also, it was good that the government has actually been encouraging a lot of the diversification into other sectors, such as biomed and medical services over the last 10 years. I work with quite a lot of the universities in terms of the research institute to help them commercialize some of the technologies. And I was actually personally very impressed on how some of these technologies has actually been surfacing up in the various institutions in Singapore. The other thing that we have also done quite well, and the opportunities are increasing as well. We've been pushing a lot of the free trade agreements, FTAs, and also been advocating a lot for regional integration. And I think that's the right way to go about doing that. Singapore needs to actually work with other people, other countries to be able to really kind of bring ourselves in the middle of the ecosystem. But having said that, we need to also recognize our weakness. And the weakness really comes in the part that we are trade dependent, meaning that we have to really rely on the international trade and be part of that in order to really create value for people. Cost competitiveness is not something that we are strong in, and we continue to have competition from neighboring low-cost countries, and not to mention the fact that actually Singapore is going to go into a phase where we're going to have an aging population. And we have to also recognize the threat that especially for Singapore exporters, we really need to adapt ourselves to the new players coming up, and these are people like Vietnam, which I spent quite a bit of time on, and also India. I think last but not least, I think with the increased polarization between the Americans and the Chinese, Singapore has always wanted to remain neutral, and I think as that, we will definitely want to continue to do that as well. The good thing about Singapore is that we were still ranked very competitively. Interestingly, in the IMD report in 2020, Singapore was actually the #1 in terms of most competitive economy. The interesting study about this is that the other 4 that came in were also relatively small countries. And I think being small does not mean that we were disadvantaged in any sense. And the reason why we were able to hold the first top spot for that was citing on our economic performance and also the measures that we have in employment and labor measures. The other thing that was quoted was also our education system and technological infrastructure, as well as the ease of setting up businesses. I think where Singapore really shines is in the fact that we have got skilled labor, we have a very educated population, and the government has actually put in a lot of investment into cutting edge technological infrastructure. So when I talk about how we should take advantage of that, I will actually share a bit about how this thing can happen. I also pull up a little study forecast by Fitch, and it's interesting to look at this, and I'm quite glad as well. So the government is expected to increase our population in Singapore from 5.6 million to almost about 7 million. I think that's a good thing because Singapore requires a much bigger population base for its economy. But the interesting thing about what the Fitch forecast is for the next 10 years is that we expect ourselves to actually be growing in terms of the GDP per capita as well. And in order for us to be able to do that, I think Singapore will continue to need to evolve ourselves to continue in the value chain pivotization and really to be able to see how we can generate much more value and really kind of get ourselves up there. So maybe to share a bit about then, why is OIG setting our Asia Pac headquarters outside of China in Singapore? This is where I want to talk a bit about how we see Singapore as a very important part of this. Our strength is really in the global supply sources of the 800 plants, right? We believe that Singapore is located very well as a hub, and we feel that Singapore can play a role in terms of being able to bring our supply strength into Southeast Asia and South Asia as a springboard. In addition, when I mentioned about the 4 flows, when you have the 4 flows of the goods flow, trade flow, information flow, and capital flow, in a traditional sense, all these 4 flows have to go together. But actually, we have found that over the last 10 years, that is no longer the case. Singapore is now a big crude trading center, but most of the crude actually doesn't actually physically flow through Singapore, but the trade actually flows through here. Kudos to some of the policies that Enterprise Singapore has actually put forward together in terms of the Global Traders Program. So we think that we are able to split the flows and be able to take advantage of the great banking and financing strength of Singapore to be able to then help us grow our business globally. This is very little mentioned, but actually Singapore has a very unique pool of talent. Singapore is a very mixed, the mixing pot in the sense that I was able to find, I was able to find very, very good, especially young talents who have come to study in Singapore that actually has many languages capabilities, whether it's Chinese and so on. And I think this is one strength that we undermarket ourselves when we talk about Singapore as a base for companies' expansion. The other thing to think about is also the fact that Southeast Asia and South Asia are not only consumption hubs, but they're also production hubs. So in our space, although we are very strong in frozen meat, we have actually 3 years ago gone into frozen seafood as well. So as you know, Southeast Asia is also a very big base for seafood production. Indonesia, Vietnam are very big into seafood. And by the way, 60% of the fruits imported in China is from Southeast Asia, including our durian, right? So these are actually areas where we can take advantage of Singapore using them as a springboard as a future supply source. In addition, Singapore is a very, very good place for the financial markets. And what we've actually seen is for some particular case, for example, logistics real estate. Typically what we do is that we actually set up Singapore SPV. Is a very good jurisdiction for asset-heavy investments holdings. And then the financial markets are also very, very familiar with real estate, for example, through a REIT structure and so on. Last but not least, governments are very, very supportive on food tech and so on, which help us think about the next level as we start thinking about perhaps plant-based protein, where we think will be the future part of that global supply chain. So last part of it, I do want to maybe talk a bit about how then do we increase our relevancy, whether you're a Singaporean, whether you're a Singapore resident, or whether you're a Singapore company, an SME, or a large company. I think what we need to look at Singapore is there's always two sides to the equation. What we may be weak in can be actually flipped over to become an advantage for us and a strength. So a small domestic economy. So I think we need to actually leverage the fact that Singapore can serve the region. So when I was working for Shell as well, I was actually in Singapore, not because of the Singapore market, but because of the fact that Singapore was a good place to be a regional HQ, to be able to supply and serve the rest of the region. Although we're dependent on international trade, as I've mentioned, we can always start to think out of the box in terms of splitting the physical flow away from the virtual flow and be able to then use the virtual flow to take advantage of the various things that Singapore offer, of which banking and financing is one key part of this. Singapore is becoming a very well-accepted hub for international investments. I've seen many successful Chinese businessmen who are starting to look at putting themselves here, whether on a family office investment or whether they are here physically to use Singapore to invest out in the region. I think we can continue to play a role to bridge the world to Southeast Asia and South Asia, which I think Singaporeans do still have the strength and the unique capability to do so. Then in terms of what we are in terms of skilled labor and technological infrastructure, I think we need to really repivot ourselves and move away from the labor-intensive sectors and go into tech a lot more. And tech is not just internet tech, but really, things around food science, for example, and also some of the much more deeper tech sectors to try to move up into a value creation chain. And given that Singapore is a great environment to set up new businesses and so on, you will start to see the structure of perhaps future businesses looking a bit different from Singapore. I think 20, 25 years ago, multinationals were the places you want to work for. Perhaps with many of these entrepreneurial type entities being set up here, we might actually want to think about family firms, family offices as being the next big growth and to be able to contribute towards that. So with that, I think I'm happy to take questions. Hopefully, this sharing will allow each one of you to have a new perspective in terms of how China is playing a bigger role. And I hope to hear more about your thoughts about how Singapore can continue to be relevant in this space. Thank you. Over to you, Laura.
Thanks, Chaik, for your insightful sharing.
That some of the shipping lines are starting to look at rerouting some of the ships around the capes as well to be able to mitigate that. So let's hope this thing gets resolved as quickly as possible. Thank you.
Being a Singaporean, how do you differentiate yourself in terms of providing strategic insight and management skill sets for OIG that set you aside from the top innovative companies like BAT?
I think as a Singaporean who's lived in China since '94, it's really a process of kind of understanding both worlds, right? So both worlds in the sense of, first and foremost, China and Singapore. I think we're rather different, if I may say that. The other difference is really about my previous exposure to multinationals, and also then the difference between that and a private enterprise. And trust me, that the changes are the differences are not little. So to be able to bridge that, I think it takes myself quite a lot of time to be able to gather understanding of what works in each of these situations, whether it's China and Singapore, whether it's multinationals and private enterprise, and to be able to come together and find a way to be able to apply fit for purpose experience and learnings from this. It's very difficult to put my finger in terms of how you do that, but I think you almost have to start with understanding and appreciation for what has worked and what may not work in a different situation. Every type of company and every type of region has its own advantages. Along with that, there are also some shortcomings that will come with that. And I think we need to just pragmatically be able to recognize that and to be able to kind of, work on a fit for purpose way to marry them together. I think the reason why I'm also very passionate to kind of come back and share a lot of the information is because I think you can only do that if you really are spending time to gather the experience through many years of kind of working with different parties. And that's where I felt differentiates myself as a Singaporean. And by the way, language is also very important. We had a discussion with Laura about how important it is for our next generation to at least have a good command of China if you want to play the role of a bridge. Yeah, because it's more than just the ability to speak Chinese, but also using your language capability to have a better understanding of the nuances that comes through when you communicate and engage with the Chinese party.
My question is this: I'm a Canadian. I'm living in Beijing and have been here for a while, and there are many Canadian meat processors and exporters. How does your organization OIG work with North American meat exporters, and how does a company in North America work with OIG?
Yeah, so yes, we do. As a matter of fact, if I'm not wrong, all top 3 Canadian meat factories work with us. As a matter of fact, I think there was a meeting where I was up in Shenzhen, where these guys were just happened to be in the office. So yes, we do. So we work with all the meat processing plants around the world that has been approved by the Chinese government. So we're basically the entire order book. If you want to talk to anybody who has been approved, we're the one to talk to. We basically work with them in the sense of helping our customers to order through them. China is now usually the biggest market for many of these plants, and therefore the Chinese market is very important. Moving forward, we'll also be playing a role of helping them, like the big Canadian meat processing plants as well, to perhaps do a bit more of their marketing as well into China, because obviously you can't kind of set up teams there just to do that. And OIG, given our strength in the supply chain and our connection to the downstream, particularly the big B customers, we're actually looking to see how we can actually help these supply bases to actually assess the China market even better.
In 10 years' time, where do you think Singapore can find a niche with China and our Southeast Asia neighbors coming up in terms of technology and talents?
I think we still have a good role to play. Yeah, I think we have a good role to play. Excuse me if I say something which is not politically correct, but I really want to put it forward, and which is to say that perhaps in the past, we have always prided ourselves as being very leading edge in terms of technology in Singapore. But I think the landscape has somewhat changed. China has developed and utilized quite a bit of technology. And for example, in our company, last year, because of the COVID, we actually launched our first blockchain-based track and trace food safety system in order to catch COVID infections if it actually happens in the supply chain, lock down everything. I think China has actually started using a lot of these technologies where Singapore were only trialing some of this stuff. So I would like to suggest perhaps for our Singapore companies to start thinking about looking to China for inspiration on what technologies can be implemented and used, and to work with Chinese firms in terms of bringing those technology or co-developing technologies with China having that ability to bring technology into it. At the same time, I think more importantly is to actually take advantage of China's size to basically do a lot of proof of concept and actually applications. I think by doing that, we can find our new role in terms of how we can actually take technology and take it to the next step. And at the same time, using our affinity to the Southeast Asian region to then take some of this technology and put it in a fit for purpose way. The word fit for purpose is a very shallow term. It just means that bring something in that really suits their need. Yeah, whether it's a price point, whether it's a functionality or stripped down version, so that we can then help the Southeast Asian folks to do that. So actually, when I look at that, we can continue to be a bridge, and that's how I see Singapore to be able to continue to be relevant in the next 10 years.
Any comments on cultured meat? Are they ready in the market to replace real meat instead?
I think one thing I was very impressed with is how Singapore has been very, very supportive in terms of food technology. Actually, when we talk about cultured meat and also plant-based protein, my ex-company Temasek has been very, very active in terms of investing in this sector. I personally believe that there is a market for this, a niche in the market for that. And I believe that this is going to be an interesting sector. As a matter of fact, I personally am internally also discussing this about how we can actually help these companies to grow, right? Because OIG is such a big player in terms of the meat supply chain, the protein supply chain. As you would have seen with Tesla, the China market actually allows it to be able to mass produce cars and actually drop the overall manufacturing cost. If we look to the future, if this plant-based protein meat type becomes an important part of it, I think perhaps OIG can maybe also play a part in terms of being able to help them. Will it replace the entire meat population? I don't think in the near future, but I think it will have its niche in space. And I think just like organics are playing a big part in the plant space and so on, I believe that would be an interesting thing to watch. And we ourselves being in this space is watching this development with great curiosity. But I'm very impressed with how the technology has evolved. I personally cook a lot, so I've been cooking the Impossible beef and so on. It was very, very surprising how similar it is to cook some of these products and how good it tastes.
So yeah, thanks, Mr. Ko, again for your insightful sharing.
Great, thank you everyone, and look forward. If you want to connect with me, feel free to scan and connect with me on LinkedIn. As a matter of fact, thanks to Laura and the team for inviting me.
Thanks, Mr. Ko, for his sharing. So next, I also will share something about our upcoming programs and also why we invite Mr. Ko here, because he is one of the advisor of one of the key project, key upcoming project of NDC. So NDC is not new to all of you because we are one of the very strategic department of NTC. Our task is to teach the Singaporean how to prepare them for future through technology and also doing their business in a more strategic way. Okay, we are a window, we are a platform, we are a generator of resource. And we are also the bridge between the academia and industry. Yeah, now we have a 4 cluster of programs. One is entrepreneurial leadership. One is this is mini master in entrepreneurship. Which is the academic credit bearing. And third part is breakthrough technology series. And the last part is a young entrepreneur, that is for the young generation, for the secondary school student. But for most of the audiences here, we focus on the entrepreneurial leadership and breakthrough technology series. So here are some of the pictures of the program we have conducted before. This is where we are in front of Tencent, bring Singapore entrepreneurs to China. Our linkage with China and with well-versed leading people in Asia. We bring our entrepreneurs to the United States also. So all these are the pictures. Yeah, upcoming, we have these fintech technology programs. So this is for those who are interested in technology like AI, blockchain, and how is the application in the new financial system. And also this enterprise leadership for transformation. Yeah, in this upcoming program, we will adopt a training plus coaching style to enable the Singapore SMEs to grow your business through go digital, go global way. So this is a 1-year program sponsored by the enterprise Singapore. But so far, you are still at some early stage of preparation, so more details to be launched soon. So thanks for your time. If you have more questions for us, please feel free to let us know. And thank you for keeping in touch with us.